Hi guys, welcome back to the channel. Welcome back to another walk and talk video. Just out in the woods, thought I'd grab the camera and talk a little bit of crypto with you guys whilst getting away from the desk, getting some exercise and all that wonderful stuff. So I'm going to try to navigate all the muddy terrain here. Probably not going to do a very good job, but I probably won't venture too far into the woods today. We'll see how things kind of get on. But we are going to be talking a little bit about Bitcoin spot ETFs, or just the ETFs in general. Is there some interesting kind of information that's kind of, I guess, semi-circulated? I don't think it's been well spoken about, but it actually makes some really interesting points about spot ETFs and the potential for the current Bitcoin spot ETFs, whether they'll be approved or rejected. And so that's going to be our subject matter for this walk and talk. So as I get into today's video, if you do find it useful, informative, smash that like button. I do appreciate that. If you find it entertaining with me trying to dodge all the mud that is here in the woods, smash the like button, I appreciate that too. And if you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will not miss another video update. So let's talk a little bit about Bitcoin spot ETFs, right? So obviously we've seen a flurry of Bitcoin spot ETFs, pretty much since early 2023. There's been a lot of interest in these kind of hedge funds, family offices and so forth, institutions basically setting up Bitcoin spot ETFs. That essentially allows for a flurry of large institutional investors to have exposure to Bitcoin, along with retailers from family offices and so forth being able to get involved in Bitcoin, right? Without having to worry too much about the ins and the outs and the inner workings of crypto and Web3. It is pretty big, specifically when we saw BlackRock come onto the scene and their request, or application is probably a better word, for a Bitcoin spot ETF. That is a game changer because they are the world's largest asset manager, right, with trillions at their disposal. Now, we're not talking about trillions coming into crypto with this, but we are talking about hundreds of billions. And we're not just talking about hundreds of billions being added to the market cap either. We are talking hundreds of billions being added as liquidity to Bitcoin. And that is a pretty big deal, right? So we know that this is going to be a huge catalyst for a fantastic bull run when that does come. However, we do have to appreciate that getting the approval from the SEC for a Bitcoin spot ETF isn't necessarily an easy task in itself. There's lots of reasons why Gary Gensler and his gang of cronies might not want to approve such a product, right? The Bitcoin spot ETF, ETH ETFs and so forth, right? So we are going to have to kind of try to, peek around the curtain, look through the lens of Gary Gensler and his cronies for what they're going to be looking out for in terms of an approval or rejection for a Bitcoin spot ETF. And that is where today's video kind of comes in, because we've seen Mike, the CEO of BitGo, come on out and actually give a pretty logical and rational approach to the approval or rejection when it comes to Bitcoin spot ETFs. And what he is basically suggesting is that if we want to see the SEC approve a product such as a Bitcoin spot ETF, then we're going to want, the SEC are going to want to see, that there is a good custodian that sits behind these spot ETFs. What we don't want to do is see, or the SEC are not going to want to do, is see a kind of custodian that has another business on the side that isn't just specifically looking after crypto assets and may actually increase the risk and exposure unnecessarily or unknowingly to the investors that use the Bitcoin spot ETF. And so what he's basically suggesting here, that a lot of these ETFs are going to be looking at Coinbase as the custodian for the Bitcoin, right? And everyone else is thinking that's fantastic, that's great news, not a problem, right? Who doesn't trust a bit of Coinbase? But here's the thing. FTX teaches us that a custodian that is a exchange at the same time increases risk, because even if you were not using FTX as an exchange, but you're just using them as a custodian of your crypto, well, you got screwed. You got screwed hard, right? So what Mike is basically saying is that there might be the possibility that the SEC reject these Bitcoin spot ETFs on the premise that the custodian isn't just a custodian, that they are also cryptocurrency exchanges in the case of Coinbase. They're both an exchange as well as a custodian. And FTX has kind of highlighted the potential risks of this. And so what Mike is basically saying, and it's hard to argue with because it does make a lot of sense, that in order for the SEC to approve, they're going to want to see a custodian that hasn't got that exchange element. They're going to want to see a custodian that is just that, just a custodian and nothing more. It adds a little layer of protection to a already risky environment as it is. And so what does that mean? Well, it means that either all these applications where Coinbase is listed as a custodian, for example, could potentially get rejected. Now, I don't necessarily think rejection is exactly what's going to happen. It might just be delays with feedback. But knowing Gary Gensler, knowing the SEC, yeah, I could see them rejecting the Bitcoin spot ETFs on this premise. Now, this has now kind of come out. It's kind of being spoken about. Even if the SEC didn't think about it, I think they're thinking about it now. And so what does that mean for Bitcoin? What does that mean for retail investors? And what does that mean for these Bitcoin spot ETFs? Well, I think that means that we're going to see a bit of volatility in terms of the Bitcoin price action. And I think that is going to stem from a rejection when it comes to these Bitcoin spot ETFs. Now, historically speaking, I was thinking more about delays a few weeks ago, last week and so forth. I thought, we'll just see that can getting kicked down the road a little bit longer before we actually start seeing the approvals. But in light of this kind of way of thinking, actually, yeah, I could see rejections being on the horizon here, which, I think could be quickly rectified, as in, we get rejected, you have the rationale and the reasoning behind why they get rejected, new applications are spun up, put out within weeks, and you're right back on that gravy train. But obviously it adds further delays to the inevitable bull run, right? So I think, yeah, that could be something that we could see. Now, I'm not saying that it's going to happen, just kind of adding, I guess, my kind of thoughts and 2 cents into the argument here, because what Mike from BitGo is saying actually makes a lot of sense. If you want to see these products come to life, then we do need just a custodian for these crypto assets, not these kind of hybrid custodian come exchanges. Now, there could be some inner workings with Coinbase that maybe splits the custodian elements away from the exchange. Maybe that's already the case. I don't know. I literally kind of haven't had the chance to dive into that rabbit hole to find out whether the custodian business of Coinbase is held in a completely separate entity, which if it does, that could potentially help quite a little bit. But if it hasn't, and that custodian element actually sits within the Coinbase company, the public company, then that could potentially cause problems for these Bitcoin spot ETFs, with Coinbase being the custodian. So let me know what your thoughts are on that in the comments below. But for me, I personally think that we are going to see, or at least I think there's now an increased chance that we see rejections for Bitcoin spot ETFs, Ethereum spot ETFs, where a custodian is both an exchange and a custodian as well. I think this does add a layer of complexity to the products, but it also adds so much more risk if we think about kind of the bad actors in the space. Now, I'm not saying that Coinbase is. I don't think it is. I think Coinbase is actually a very good platform. I mean, it has its pitfalls, as they all do, but in terms of, exchanges, I kind of do rate Coinbase being up there as a nice platform, easy to use. It's kind of the entry level for most retail investors. And so I don't think there's any kind of malicious kind of intent from Coinbase's side in the same way that we saw with just pure, I guess, incompetence that you saw with FTX and Sam Bankman-Fried, right? But for the most part, the risks are quite obvious, they are there, and these are risks that the SEC will consider, in my opinion. And if they weren't thinking about it, I can bet my bottom dollar that they're thinking about it now, and that could be causing problems for these Bitcoin spot ETFs going forward. So watch out for that. Now the delays could just be, you know, that they need to sort out some of these you know, crossing the T's, dotting the I's, sort out their custodians, because that would be the nicer way of approaching it. If the SEC were open and friendly about all of this, then all they would have to do is open up a dialogue and say, look, your application's fine with the exception of your custodian. Sort the custodian out, we'll get it signed, we'll get it approved, not a problem. I don't think the SEC are like that way inclined at all. I think they're just more likely not to communicate, put a big rejection stamp on it, and then just palm it off once again. Again, the SEC are supposed to be there to protect retail investors. It doesn't really have a good history of doing that, but that is ultimately what they should be doing. That's their mission statement. Now, don't get me wrong, 𝗕𝗓𝗪𝗀𝗪 and his whole crony crew of misfits have definitely done a very bad job at protecting retail investors. We just have to take a look at the Ripple lawsuit to know the billions of dollars worth of damage that they did there, and obviously dropping the ball on the FTX and not keeping a good tight ship run has obviously caused billions of dollars of damage there as well. So we know that 𝗕𝗓𝗪𝗀𝗪 and his whole bunch of cronies are really shit at their jobs. So maybe, you know, they'll approve everything and just kind of, you know, miss the whole point here of protecting retail investors. But if I were to wear my SEC hat and I were to think, how would I protect retail investors? I think Mike from BitGo has a pretty good point that, yeah, you probably don't want your custodian to be an exchange as well as a custodian. But you can let me know your thoughts on all of that in the comments below. I think we're going to be in for some volatile months in the space of crypto. As much as we kind of want everything to be moving upwards, I suspect that things are about to get very tricky, very fast for retail investors invested in crypto. Let me know your thoughts in the comments below, but I'm going to wrap this video up right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe. And if you haven't joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. Until the next one though, guys, have a fantastic day.